our channel Talk of Town. We are here in our weekly series Market Wrap. I have two market wizards, if I can call it that way, with me today. Mr. Prabhanjan Rao, the SEBI registered investment advisor representing Elysian Advisory, reporting straight away from Dubai. Uh, Also, I have with me Mr. Ashwin Kumar, director of DA Capital, uh, housed in Namma Bengaluru. So, welcome to both of you.
Good introduction. Did you practice it, Lakshmi?
This was completely impromptu because I think the only interesting thing that we can do in the episode is the introduction because markets have been quite dull for many weeks now, right? And we had this leading. I mean, this week leading up to the Independence Day, and back then during independence, the Britishers went out of the country, and these days FIS are continuously moving out of Indian markets, and that's a correlation which we saw over the last few weeks. Markets surprisingly closed flat for the week. Indian markets, US markets was, I mean, again positive. Both S&P 500 and Dow Jones were up. And I think Prabhanjanji, over to you for the fundamentals. You are the right person to talk about this.
Right. Thanks, Lakshmi. As Ashwin rightly mentioned, you gave a very wonderful introduction. Let me reciprocate the same. So, a bright and cheerful good morning from Dubai to all stock market enthusiasts, Ellen and Ashwin. Where the sun is blazing, the coffee is bold, and the markets never stop surprising us.
Right.
Okay, jokes apart. So, on
Did,
the fundamental, I think.
did you guys both practice it beforehand before I connected?
No, not a practice as such. So, since I keep shooting a lot of videos, so it
I
just
thought so. Thought so. I thought so.
great. So during the last week, a lot of things have changed. A lot of things have withered out. And crude, if you see, it has come down an inch down a bit to 65.8 levels from 67 last 2 weeks. Then the dollar index, surprisingly, it is around 97. I mean, little shrink from 98, 99 levels. But rupee, it really is the constant, or it weakened to 1 month low again.
Yeah.
It's hovering around 87.6. Of course, it's pressurized by the domestic equities, weakness and FII inflows. So on the US markets, if you look at it, they ended the week mixed. The Dow held its ground, but S&P and the Nasdaq showed some fatigue despite all the AI excitement. Why? The inflation came in hotter than expected, and that's pushed the Fed rate, Fed cut hopes further out. What does that mean to us in India from the stock market perspective is when the Fed hesitates, a global liquidity hesitates. So foreign inflows into emerging markets like ours might not be as smooth as we would think. But here's the interesting part. US retail sales and the industrial output was surprisingly strong. So the American economy isn't it slowing down sharply at all. But it's good for the global demand. But it also means that the Fed doesn't need to cut rates anytime soon, and that keeps the dollar strong, which has done that. From 98 levels to it has come to 99. It means the dollar is getting stronger, and the rupee is under always pressure because though RBI is managing that liquidity. Now, during the last week, a big development between Trump and Putin in the Alaska summit. So it was more than a theater than a substance to me. No real breakthroughs, but the optics were very, very important. Trump made it very clear: no business with Russia until there's peace in Ukraine. But I feel there will be some sort of a breakthrough unless there are no backdoor meetings or influences from the European Union or the NATO summits. Uh, but this, why is it so important and matter to us, is because of the Ukrainian war premium in oil prices. Isn't it going good, or is it going anyway anytime soon? India still benefits from the discounted Russian crude. but we are also walking a tightrope. In the US, if the US decides to get tougher on buyers of Russian oil, which includes us, our oil marketing companies and transport sectors could feel the heat. Now, another important thing on the tariffs, which is a recent development, is uh, US has announced new tariffs on the steel and semiconductors. That will have a significant fundamental bearing on these two sectors. This could ripple across, Asian supply chains, and for India, what it matters is, it cuts across both ways. Our steel exporters could see some headwinds, but at the same time, India's semiconductor ambitions. Think of Micron's project in Gujarat. Suddenly took a lot more attractive than to the US. And let's not forget, Trump has kept the China question hanging. He has postponed it for further 90 days more.
Correct.
So all in all, with all this, Trump put in summit, with the tariffs on the steel and semiconductor sector, and on the inflation. So we need to be a little cautious, and then see how it flares in the macroeconomic factors, and this will really, shape up the fundamental, direction to the markets going
Right.
forward.
So I think, basis what you explained just now, you're still hopeful of some light at the end of the tunnel, if I get you.
Always.
Yeah, yeah. Okay. Interesting, very interesting. Ashwin, how are the technicals looking for the global markets? You're on mute.
Sorry. So absolutely no changes from the last week's comments. Commodities showing a slight cool off. S&P continues to rally. Anything that is set lifetime highs, not backed with major support from the at least 60 to 70% of the stocks is always worrying for me. And when I'm looking at a very long term chart, see, I always keep a ultra long term view of any index or any stock that I'm looking at. And we are in probably one of those, not exactly the last leg, but the beginning of the last leg of the uptick in S&P 500. I don't know when the top is going to happen. None of us know, and we cannot even predict the timelines, but at least the wave 5 of the cycle has started. So this is where I would still be hopeful of a good, decent up move, but not too aggressive on the longs. Apart from that, the commodities, I am still very much in for the long positions, but just let us allow it to cool off as much as it can, because the last 1.5 years has been like a rally like there is no tomorrow.
Correct.
And suddenly this 1.5 quarters of cool off will not cause any dent to the only dent it will cause is to the XIRR. What was initially 43% might come down to 38%, but that does not mean that there is no uptick going forward. There will be. Silver is definitely looking more bullish to me than gold at this point in time, and we will talk about the Indian markets when you allow me to.
Sure. Before we actually get into specifics on the Indian markets, quick question to both of you. You know, Prabhanjanji, if you are an investor today, what portion of your portfolio would constitute commodities, which is gold and silver?
Sorry, Lakshmi, I lost you last 5 seconds. Can you repeat?
No, it is a straightforward and easy question. So the question was, what portion of your portfolio today would constitute commodities, which is gold and silver?
If you ask me personally, in my personal portfolio, yes, I do have silver. I don't have gold, and I've been very bullish on silver since last, I would say, 8 years. And I have a very interesting, equation between the gold and silver. And I always say that the proportion uh, per rupee, or per ounce of gold or silver is shrinking.
Correct.
So, and that today, if it is at 20, then tomorrow I'm seeing something close to 18, 15. So the
What we
value,
call gold silver parity.
gold silver parity. So the gold silver parity is, is getting reduced, and um, that should really, really, increase the usage of silver. Just for it's a like, no brainer, because silver has got the industrial usage.
Correct.
That's what makes it more valuable than gold. So I would always recommend, silver is the next thing.
So, what portion of your portfolio, overall financial portfolio, could be commodities, sir?
Roughly about 3 to 4% is what I'm holding in my personal portfolio on the silver.
Okay. Ashwin,
10 to 15%.
10 to 15% in commodities.
In commodities, because I don't look, see, if I'm purely looking at it as a investment bet, then I would say it's about 5 to 6%,
Right.
1% here and there. But I'm also looking at gold and silver sometimes as a hedging instrument for my equity.
Right.
That's when it crosses the double digit mark.
Okay. Okay. Interesting. So, for our viewers, we have two different perspectives. So, this does not constitute an investment advice. So, we make it very, very clear.
Surprisingly enough, Lakshmi, you're aware of it, between November and March of 2025. November 2024, March of 2025, this particular portion had almost hit 18 to 19% mark.
Right.
But eventually, when the markets started recovering, I think that portion reduced. So I would say right now it's about good 8 or 9%.
Okay, got it. So it is important for each investor to assess their goals, risk tolerance before deciding the composition of commodities. So do consult your financial planner advisor before doing it. Now, time to move on to Indian equities. Prabhanjan ji, over to you for the fundamentals on domestic data.
Thanks, Helen. And what else? I mean, during this week, yesterday on the eve of the independence, our beloved Prime Minister has announced that there would be next gen GST reforms. By Diwali, GST 2.0.
Yes.
So, I mean, that will be a double dhamaka, for all the households by lowering the tax burden on everyday items and simplifying the tax slabs. And we were expecting this since 8 years. A lot of so, it's been 8 years. The GST. India got into the new reform of the GST, but we were under the four tax slabs. A group of ministers is currently reviewing the merger of these existing tax brackets. For the benefit of the viewers, we are at 5%, 12%, 18%, and 28%. So possibly redistributing, many items from 12% to the lower 5% tax bracket. This is what we have got that feelers from, from the media. So imagine from all the gamut of items falling under 12% are brought under 5%. The amount of economic stimulus it brings to the economy, that's unimaginable. So just give you a perspective, Ellen. City analysts estimate that approximately 20% of the consumer goods, that is packaged, it may be packaged goods or apparels, hotel stays, etc., which currently attract 12% of GST. These constitutes about 5 to 10% of our overall consumption, and 5 to 6% of the GST. That is the stats. Moving many of these goods to 5% tax bracket and some 18%, from 18%, could cause an approximate 500 billion in INR revenue loss. Okay, but and this 500 billion revenue loss translates around 0.15% of the GDP. But however, if this policy comes through by Diwali, this policy may move a trigger a household stimulus of up to zero point 0.6 to 0.7% of the GDP in the 25-26 fiscal year. We might lose about 0.15% in terms of revenue loss, but the stimulus, 0.6 to 0.7%, is pervasive. It's like it only accumulates for the next year, percolates to the next year. But the result, the cut in the GDP is only for 1 year. And why it matters to the consumer spending is, when it comes to direct relief for the consumers, uh, reducing the GST on essentials and everyday items means lowering prices at the retail level, immediate relief for the middle and lower income households, which are very very essential, especially during the festival and shopping days. And what it means for discretionary and retail sectors is lower tax rates on apparel, packaged foods, and hospitality services could spur discretionary spending. It always benefits retail chains, FMCG firms, and hospitality related sectors, and it acts as a catalyst for increased consumer footfall in both physical and online retail. Now, let me also bring it to the notice of all the stock market enthusiasts. Not only this Diwali Dhamaka of GST 2.0, but our RBI has already taken this step of reducing the interest rates. These two, it works as a double engine, and then it really should spur the economy, and it should really restore the confidence across consumer facing sectors. And all these days, you might have seen the consumer discretionary, these are the two sectors which were lagging behind, and I see a big boost in the coming week. Maybe by Monday this sector should give a big rally when the markets open.
Interesting. So two important points which I would love to add to what you rightly mentioned, Prabhanjanji, is this entire aspect. While there'll be short term pain, but I think it is for long term gain,
Exactly,
as simple as
exactly.
that. And with more money available at the disposal of the end user, because
Right.
mind you, the entire chain of GST, the end user is the person who's paying the GST or bearing the burden of GST. Now, with the reduction in the rates for most of the consumables, if the GST burden is lowered, then there is more money at the disposal at hand. So this
Right.
also means they have a choice to either spend more,
Spend or save. I knew that was. I saw that coming.
there's a possibility of investing more. So
Absolutely.
right here I have a question to both of you. So which bucket you will fall under? There's an option to if there's going to be more disposable money in your hand, are you going to spend or are you going to invest?
70/30. Spend 30, invest 70.
100% invest, no spending.
100% investment. Okay, excellent, excellent. So another point which I wanted to add, Prabhanjanji, is one silent, fundamental thing that has happened, though we're not too worried or concerned or buoyant about it, is, as a country, India has got a rating upgrade during the last 1 year. Yeah.
Absolutely, absolutely.
So, but I thought I'll just make that point to our viewers.
Yeah.
Over to you, Ashwin, for technical.
Before Ashwin, one more point, if I am allowed to talk.
Yeah, please.
Right. So another thing, which RBI recently made an aggressive stand that to allowing the foreign guys to have a rupee account in the respective countries. So this will always reduce the dependency on dollars. In a long term, both government taking such steps and RBI seconding those steps in a fiscal way. I think we are moving in a very right direction, and India is always. I always believe that we are in a very such very sweet spot in the first next coming 1 or 2 decades.
Absolutely, sir. I think the beginning of de-dollarization.
Yes,
Over to you, Ashwin, for the technical side.
Oh, absolutely. Let's start off with the open interest because that speaks a lot of things that that words cannot. And Nifty, Bank Nifty is something that we kind of anticipated a pullback. There was this option data that was suggesting that there was not much downside left, but still, after quite a couple of weeks, market ending positive even by 1% is always a pleasant welcome. Once again, you have not many stocks participating. See, we have been repeatedly mentioning about the fact that it may not, although we are confident that the markets will eventually go up, but it's going to be a stock pickers market. You may not have the broad market rally that you saw between 2020 and 2023, 2024. But this is where all your conviction about fundamentals, technicals, your flow charts, the tight filters that you have for stock selection, all will come into play. But because we are talking for the week, let's quickly jump to the options data. Sharing the entire screen. Okay, I have couple of highlights here. So on the downside that I have marked is 24,000. Then markets are what trading at about 24,680 range, 580 or 680 range. So the two big mountains that you see here are between 24,600 and 24,700. Once that is breached, you have not much resistance all the way till about 25,000. So this week around, either it's going to be a very contained market between 24,500 and 24,700, or it could be an explosive market on either side with high volatility. Let's not forget, Lakshmi, in the last couple of days, along with the market kind of shooting up, volatility index has also gone up by a decent margin. Maybe one of them is lying. We don't know which one is lying, but we will kind of figure it out. It was a truncated week last week. We will figure it out in the next couple of days. Having said that, for this week, the bias looks more bullish on the market. Again, supported by Bank Nifty, which kind of pulled back above its major support zone for in the recent past. But having said that, I'm not suddenly turning bullish all the way that we go and buy. There are a couple of automobile stocks and FMCG stocks that are looking very, very attractive, and you have certain standalone picks from manufacturing sectors that are looking very positive for the week. Once the volume, they're very well poised in terms of technicals. The only thing I'm looking at is the volume buildup. Once the volume buildup is there, because like I always mention, any trade setup without the support of volume is not to be taken seriously, because it could also might well be a trap as well. So these are the sectors that I'm closely monitoring. Once you have sufficient money coming into the markets, and mind you, Lakshmi, in the last couple of weeks we also spoke on a very personal note that the cash that was parked in many of the by the fund managers in mutual funds have been slowly started to deploy into stocks, especially large caps. And that is where I suggest all our viewers to keep a tab of large cap stocks, probably the top 50 or 100 companies in the country, which have a sudden spike in their volume, could be the next, big runner in the uptick that we are going to see in the market in the next couple of quarters.
Wonderful. I think we've given our viewers very good insights for this week, and looks like hopefully the next week could be an interesting one for us to discuss more on these lines. So please don't go anywhere. Before that, Prabhanjan, you had something to say.
Yeah, I just wanted to ask a question to both of you. What will happen tomorrow after this Big Bang reform, which Modi has announced? So, where will our Nifty go? What do you feel?
I always have one answer. It's a random walk theory. None of us know. It's a probability. So I always go into the market thinking that I don't know what is going to happen. While there are many instances when the fundamentals are being interpreted as positive, but the market opens all negative, and the vice versa as well. So one thing I've learned in the markets is not to be too directional or too optimistic about a particular view. Go into the view or place your bets in such a way that it will go wrong.
See, I'm telling you, we are all chartered accountants. One famous telling for all of us: expect the unexpected.
Absolutely.
So
Very well
I'll
said.
answer this in two parts. In the meantime, I'll request Ashwin to share that options data once again. So one, if you're an investor and if you're a long-term investor, doesn't matter what happens tomorrow. Keep investing, keep buying, stay invested. If you're a trader, you can take cue from the screen actually. In my interpretation of the screen, which could be completely opposite of what Ashwin is thinking, is those two tall bars which are close to each other. I think people are getting into long straddle, buying both call and put, so they'll make money whichever side the
The
market shifts.
market breaks out.
Yeah,
Or
and
Lakshmi, they could be selling and saying that the market will be in a tight range.
yeah, or they
Right.
could be buying, doing a long strangle there, and probably the two pillars on the side is a short strangle. So just to hedge this position, maybe that is my interpretation for traders.
And I didn't tell my expectation. I feel next week is going to be in Monday is going to open up on a positive note, and every open will be subsided by a what do you call it, as sell. So the second rise what we get is where we need to watch and see if it sustains the second rising. If it sustains, then I feel that will decide the direction of the markets.
Excellent, sir. I think wonderful discussion today. You know, Stay tuned for more updates on the markets. Don't go away. Stay tuned and see you in the next week with more information. During this period, keep reading on the 24 rupee ITR by Geo.
Uh, See you
All
guys.
right. See you guys. Thank you so much.
Baby, I'll show you.